All right, all right, all right. What's up, everybody? Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody had an amazing day yesterday as we are about to get ourselves rolling with our Friday morning edition of the Daily Market Commentary. You know, we yesterday saw a little bit of a market rally coming off of our demand zone from our live trade room. So if you were in there with us, hopefully you were able to pick up some of the movements. And then we have a little bit of price action that's brewing in the Dow. So if you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates and all of those pieces of fun for the channel. And then if you are if you're a regular viewer, please make sure that you hit the share button and you share this out to others. We'd love to spread the word about what it is we're doing, and maybe hit that thumbs up button. It means a lot. Okay, let's get rolling. I could get one of those really high-tech thumbs up like graphics, but I'd just rather use this. It works just fine. All right, so let me go ahead and shrink my face. Nobody needs to see my face that large, ever. And we'll get started. So, Liz, Larry, John, Vince, Bill, Mr. Rush, good to see y'all. Thank you for coming. It is Fit Friday, I will tell you. I was and because my back's a little bit better today, I was actually able to exercise, so I feel a bit better. So, your morning fitness reminder always helps me. All right. So taking a look at the ES, we had this level yesterday, and this level that we had yesterday, we got a little move away from it very quickly on a 15-minute chart, but I didn't really like the price action that we saw out of the level. And so what we did was we said, well, since we got a very quick move away from it for about a 2-to-1, but then I didn't love this upper wick and this upper wick and this upper wick. And I said, maybe it's a good opportunity to take your stop and move it to break even. Because then the very next candlestick, price came and poked right through the level. Now, if you wanted to, get out of that position earlier, take the little 2-to-1 and walk away, then that worked out okay. If not, then what's the word? C'est la vie in the market overall. So when looking at at this level, I think that this level was an okay zone, but it was not as good as our NASDAQ level from yesterday. So our NASDAQ level from yesterday was this area right in here where we had seen a pretty good move away. Now, why did we like this level yesterday? Well, the reason we liked this level yesterday is because this area was a former area of resistance, right? And that's where fair price value areas come into play. A lot of times people don't take into account old resistance acting as new support on the breakthrough, and that's where it's slightly different on a fair price value area setup. So now, when I look at both of those areas of demand, both of those areas, both the NQ and the S&P, I got to remove them, and I got to look and see where's my next area of opportunity. So, quick quiz, where is my short? Oh, I missed a side-splitting XLT. That hurts me. All right. Where's my short? Where am I going to look to short this market? I mean, we're sitting right here, up here at this all-time high, and where I'm looking to short is I'm not, right? I'm not, because we don't spit into the wind, we don't tug on Superman's cape, and we don't short the all-time high. And so I can short with price coming off of it, but I'm not going to short it, on a reversal trade. I can only do it on a breakdown if we get the proper breakdown setup. Now, I will say that if I throw my, I'm going to throw RSI on today, and if I throw on my RSI on a 4-hour chart, which is my trend measurement, I can see that I have two fairly similar swing highs, but I've got two slightly lower swing highs in my RSI. So a little bit of divergence here, but still above the 60 line, right? And we talk about the modified 60/40 RSI. If you're not comfortable with RSI, you can also use the MACD, right? The MACD showing me two relatively similar highs. And so that tells me that momentum is not slowing all that much. If I switch it to the 1-hour chart, though, we will see a slowing of momentum. So on our trend direction, we're not seeing a slow of momentum, but on our trade time frame, we are, right? on our trade time frame, no doubt about it, we're seeing the momentum slow down, okay, for certain. When I look at the RSI on this one, we can see that our RSI, we're getting slowing momentum with our last swing high right at about the 60 line. Now, this is an indication that we may see a bit of a pullback. I do not think that our big picture trend is over by any stretch of the imagination. I do, however, think that there could be an opportunity if we get the right amount of basing to take a small time frame short, and I really like this area of demand down below. So this area of demand down here, this 3665 by 3662, this is one of my favorite types of levels because it's kind of hidden. It's not a level that a lot of people are going to lean on, and if we get a pullback into this area, then I'll still feel really comfortable getting long. Well, what about some of the areas before that if we pull back into them? Well, we do have this area here that was formed at the London Open. So if we pull back to this area in here at the London Open, that we may get a reversal off of there. It's a fairly small zone. And then certainly a breakout trade is still always in play above an all-time high. Now, we got to a new all-time high last night, 37.23, and our thought is that we've got a continuation for price to, certainly a case for price to keep moving higher. So those are the two levels that I think make the most sense from a demand standpoint. We do have this area right down in here that I think is still also potentially valid, but the time of the day isn't as strong. I wouldn't be surprised to see basing happening somewhere in here. If we get basing in front of this level, I would, like I said, based on the momentum, I wouldn't be surprised to see that pullback. Okay? Thoughts on that? Any questions on the S&P? Next would be the NASDAQ. So in our NASDAQ trade, very similar level down in here. NASDAQ bounced off of this 9 p.m. level, got a little run away. Potential breakout above the high if you wanted to give a breakout trade above the high. The thing I do like about the NASDAQ is that it does have a little ascending triangle look about it, right? As we are, that rising trend line up. And so with that rising trend line higher, I could see a potential for a breakout. So on a reversal, I like the S&P a bit better. On a breakout, I like the NASDAQ. Speaking of breakouts, the Russell gave us a little bit of a move above here. That was really the second touch. We popped down, then back down below it. We've now popped back up above it again. But, still going higher. Now, I will say that if I throw my RSI in here as well, that we're actually seeing a little bit better on the momentum side here lately. And so not as big of a momentum slower on this side. Let's see, John, that 3705 by 3708 is a perfect picture on a share bar. Yeah, John, that 3705 by 3708 is a really good picture. Also, if we looked at volume profile on it yesterday, and that was the other thing that I like about it too. So looking at the Russell, this was our breakout line. We've actually got a decent little move from there, but it's kind of stalled out. I'm not as big of a fan of the 2 a.m. reversal in the Russell, only because the basing is a little bit closer. This basing here is a bit closer in the Russell than it is in my other markets. So it's not as strong of a level for me. So when I look at the Russell for a retest, I think there's a chance that we come back and retest this area. I'm just not willing to lean on it. So I'd need to go candle to candle somewhere down here because of the basing that's close to that 15-minute level. And then the last one was the Dow. Now the Dow, I put this out in Twitter yesterday for those of you that keep up. And if you don't follow, just search for my name and follow me up on Twitter. I put this one out because I thought it was kind of an interesting view. It's definitely pinching in the Dow, right, with an ascending triangle. setup right through here. And this is one of the better setups that we like to see for a potential breakout. So we've not put in a new all-time high yet in the Dow, where we have in every other market. We crossed 30,000 a while ago, and people were it hit 30,000, then stopped, and then crossed above, and then we got back up above it again, and it's been flirting around that. So let's see how long we can stay above that 30,000 in the Dow. But above 30,300, do we make it to 31, right? That would be the question overall. So questions on the equities markets before we move off of equities and go take a look at some other markets. Questions on our equities positions. Let me share this grid. All right. Next, let's go over to energies and metals. All right, so looking at our energies and metals market, starting first with crude oil and then moving over to gold. Crude oil is doing a whole heck of a lot of nada, as we did have the contract rollover gap right through here. That would be where we would reverse and come back down. I do believe in contract rollover gaps having some validity to them. So I want to see what this looks like as we come back to it. But I will say that there's no question that we're seeing this price pattern, right? I mean, hopefully everybody can see that pinching price pattern in there when it comes to crude oil. So since that price pattern in there is giving me a little sideways pinch, I'm a little bit less comfortable with the long down here because it's going to be basing close to the level, right? That being said, I think that we still have a supply level up here above us. Both are valid. The supply level would have to be a confirmation. The demand level can still be a limit because my overall big picture trend is still going up. So I can't trade against the big picture trend unless it's a confirmation entry. If I were to, a lot of people have, when I look at this, my mind immediately goes to an iron condor, and I want to see what that's paying for the 3-day iron condor. Oh, never mind. I'm only going to get it for the 21 days, 27 days. Now, I must have missed out on the other one. All right, so I'm not going to get an iron condor of any semblance worth any time. Meanwhile, technically, I could go really, really wide. I got 27 days. We may be able to get something much wider. If we go out and we do something, 27 days is not too bad. You could do the 52. The 52 by 54, give you a 24-cent credit, which isn't bad. And then on the other side of things, the 45 by 47, or 45 by 42, excuse me, 34-cent credit. So that's actually a decent iron condor. 45 by 43, excuse me. There you go, 26-cent credit. That's better. So that is a $500 profit against a risk of $1,500, but certainly your stops would be on the outside of there. So your break evens are at 52.50 and 44.50 on expiration. So 52.50 and 44.50. So you're looking at an iron condor that gives you this much room, right? Now, is that a decent one? I think it's not bad. I think that that you've got almost a month though that we'd have to stay in that range. So for a rate of return, it's pretty good. And you could set that up, and then if we get basing somewhere up near that short strike, you can take you can still get long and short. You can still play it directionally, but this is a way to play it inside of that range for the next few weeks. So just an opportunity to think about, because you take advantage of, in those 27 days, you got to remember we've got a couple of holidays that are in there that might be worth considering for this iron condor. So. And I know we don't normally go over that in the daily market commentary, but I think it's worth considering as an opportunity in this instance. All right, next, looking at gold. So looking at gold, we had talked about the fact. So in yesterday's trade update in gold, part of the update was that broke above the 1896 area, but without the prerequisite basing to give solid entry. Currently is putting in a small tweezer top above the breakout, so be cautious of a pullback. In the event of a pullback, look to 1888 as a possible long entry. So we had looked at 1888 as a possible long entry on a potential pullback. Well, when we looked into that 1888 a bit deeper, and the reason we looked at that was this 15-minute chart had told us, hey, that you may get a little entry here right around this level. But we came to it and we just started basing sideways. So it really told us, okay, this trade probably is not going to go anywhere. And then we've just been basing sideways ever since. So now what we're looking at when I look at gold is where's my next area for a pullback? And on a pullback, we have two levels down below that are still clean in the hourly time period. One's a kind of a wick over wick area here formed at a decent time of the day, and one's a pivot that's formed at a better time of the day. So we actually have this set up as a confirmation entry for the first trade and a limit entry for the second trade. All right. Next would be nat gas. So looking here at natural gas. In nat gas, we haven't taken a trade on nat gas all week. I really don't see that changing today. I think if we get below here, you could have a breakout. But I just don't see that changing today, and let's keep an eye on nat gas for a gap and go over the weekend. Copper yesterday, we had talked about this little area of demand that bounced and gave us a good rally. We found another area in case you missed it and didn't get in, but it has not come back and retested it as of yet. You could theoretically, especially with this long wick we've just gotten right here, so we've got one touch, two touch. If we come back into here with basing and you get a breakout trade, I think then you can trade HG in that same direction. And then we looked yesterday at silver. Let's take a quick gander at silver. And in silver, we had looked at this area down here of demand for potential reversal before price coming back up. You will see that as we go through our currencies, there's a lot of markets that put in a level yesterday at about the same time of the day. And whenever all the markets put in a reversal trade at about the same time of the day, there's usually something going on in that trade to make that to say, is that going to be worth it or not? All right, move this down, expand on this a little bit so everyone can see. All right, same thing with this one. All right, so let me share this grid. Any questions? You guys have been awful quiet today in the chat window. Any questions, anything to add, any thoughts? Yes, Bill, that lower level is gone. I left it on there so I could take a picture because I meant to do that, but I forgot. That lower level is no longer valid, correct. All right, moving over to our ags, so starting with our ag markets. And yesterday we had looked at soy. And in our soy market, we had this really close touch. It was a touch that we almost got ourselves filled, and then it never came back in and moved away strong. We then got to our basing level, our breakout level, and got a little bit of move before then a move higher. So both of those worked out as pretty good little levels. Unfortunately, there was no fill on those two, and a retest of this breakout line is in play today. quadruple witching. I don't think today is quadruple witching, if I'm not mistaken, but it very well could be. I don't really pay too much attention to that. I know that we have our options expirations and a lot of those, coming in, but I'm not sure if all of them are. Corn yesterday bounced off of our demand area, and if you switched it to a confirmation entry, you still had a reason to get filled. So corn bounced off our demand area yesterday while we were in class, actually, and then moved up to our basing level and then broke out again, and now is coming to supply and is starting to move down. So this corn trade was a very strong level as it hit there and moved away from that position. I'm going to remove that level as of now. I'm also going to remove the breakout trade. And now I would say that our retest area would be right in here. So that would be your retest level. If you didn't take the short here and you want to jump in on it, I don't know that I would right now. And the reason for that is because we had a very slow move into it, and then we're not getting a great move away from it. I wouldn't actually be surprised to see price reverse, right, somewhere right in 431 and head higher. Yeah, it's 3 witches today, but I didn't think about quad witching. Wheat. So looking here at our wheat markets, we yesterday had talked. I'll be quite honest, I don't remember why I talked about these lines yesterday because they don't look like breakout lines that I normally would have. So I'm having a brain fart on it. I did not have a trade set up. I know that. So when looking at this, I have a base drop, a really good supply area up here, but we've based in front of it. So it's got to be a confirmation area at this point. As far as adding anything new, there's nothing new that I think I want to add to wheat. And then soybeans, breakout trade, but we didn't get the prerequisite basing in this one like we would have in the other markets. But I'm going to leave the line here because this could be an old resistance becomes new support scenario where price bounces off this line. So if you want to get long somewhere down here, you still may be able to. All right. I don't play too much into the quadruple witching, the double witching, the triple witching. I don't play too much into that. I think 10 years ago it mattered. I think now that we have something expiring essentially 3 times a week, it used to be that it was a big deal because we had so many things expiring on one, but at that time, we didn't have weeklies. We didn't have things that expired 3 times a week. So I don't look at quadruple witching and triple witching and things like that like I used to. I think that it's lost a lot of its luster and a lot of its value. It's I'll call it, expiration days have lost their novelty. Let's call it that way. Expiration days have lost their novelty in the fact that you now have weekly options, and hell, in your indexes, you got options that expire 3 times a week, right? So I think that's why I don't really pay attention to double witching, quadruple witching, triple witching, quintuple witching, or septuple witching. So, yeah, I just, that's one of the things I don't, I pay attention to when the rollover's occurring on my contracts, but most of them are occurring so far before the expiration that it's not an issue anyway. So, all right, bonds and currencies 1. And then, 90% of your brokers are going to send you a message, hey, your contract's expiring soon. What do you want to do? So, looking at the 10-year note, we talked a little bit about the 10-year note yesterday. This area here, I'd left a line on the chart as we saw that big move down from there off the Fed announcement, and then it went sideways. So our thought was that it was not a thing that we were going to be trading yesterday, as it did just kind of go sideways yesterday in this one. Now, we are going to take a look at our currency markets, and you're going to see a level in the currency markets that basically every currency market had. And our thought yesterday was if every currency market has this level formed at the same time, then it might be a little bit more dangerous to trade all of them. You're only going to trade the ones that make the most sense to you. And it was right around that 9 p.m. level. So we had this resistance, move away, basing, and then a strong move up. So I think that this one is still pretty good left over here in the euro. I will say that the euro, we have not put in a new high here. And so since we did not put in a new high, I would be a little bit concerned on this position. So with that being unable to put in a new high, I don't know that I'm gonna jump in on this trade. I'd wait for price to come back into here. But if I get basing in front of it, it's going to cancel it right away. Now, we looked at that same level in the Canadian dollar. And the Canadian dollar, we touched it, and then came back up, and then came back through it again, and then came back up, and so it just kind of fizzled out. Didn't give us a strong move out of the level. If you took it, I mean, you got about a 2-to-1 from there on this first little move and go. But then it came back down and gave you a real quick stop out if you didn't take some money off the table. And so that shows me that, okay, we got a bit of weakness. And there's a lot of, what is keeping a lot of these currencies in kind of a difficult slate of trading, currencies and bonds? What's keeping a lot of these currencies in a lot of, tough sledding, if you will? Somebody tell me what's causing that, because there's a fundamental reason why trading currencies has been harder for the last couple of weeks. And while you do that, I'm going to share this grid. Anybody got a thought? Anybody got a thought why trading currencies has been a bit more dicey lately, and we're not getting a definitive? Yeah, it's the dang U.S. dollar where people can't make up their minds what they're going to do. And really, to me, that comes back to the stimulus package in the U.S. It's the U.S. stimulus package and the unknown of whether it's going to pass. And I'm not going to get on a soapbox or get overly political on YouTube, because Lord knows that's a way to get me thrown off of YouTube. But there's camps of people that are calling for universal basic income until the pandemic is over. And I think I saw yesterday something that was trending was $2,000 a month to every American. I don't know if anybody else saw that or not. Was $2,000 a month given out to every single American in order to continue the stimulus. I saw another one that was, just a one cut of a stimulus check again. Well, I mean, if you think about it, and I'm just saying, if that number floats, like let's say that number of $2,000 a month to every single American floats, first of all, where does that money come from, right? Where's that money coming from? Well, it's coming from the fact that we don't have it. We're just going to have to create it. We're just going to have to print it. Well, how do we just print it? Well, we print it by creating more debt, right? Well, then the question is, who's going to buy the debt? Well, nobody buys the debt if you've got the debt the way that we do. So, but we can just turn on the printing presses and nobody notices. Well, who notices? Well, the person that notices is the overall global currency market, which then shows that the U.S. dollar will tank. The other currencies will go up. So there's a thought that we're not sure if that's going to pass or not. We're not sure if anything's going to pass. And so that's what I think is causing. The dollar is still continuing its move down. The dollar is still continuing its move down. The currencies are still going up, but they're going up at a much slower rate, and we're seeing a lot more chop inside of there. So, yeah, no, Dennis, and listen, once again, I'm not trying to be overly political one way or the other. I agree. Life support when businesses are shut down. I'm not saying whether I agree or disagree, because frankly, it's not my life, right? Do people absolutely need some sort of help and support? Absolutely. Do I agree with exactly how everything is going to get transpired? I don't know how it's going to get transpired. That's beyond my pay grade. But it is still going to be a stimulus for the economy, one way or the other, right? Any money that gets injected into the economy is going to be a stimulus. And so I think that when you look at it from an economic perspective, there's no question that when you flood the market with currencies, you will have inflation. All right? I mean, that's just going to happen. But inflation would then at that point be relative, right? Because if I've got more money in my pocket and things are more expensive, then it's not as big of a deal. So I'm not smart enough to figure that stuff out. That's what an economist does. What I do is I look and say, okay, well, yesterday's demand level had basing in front of the level, which means I can't take the trade. That's up. That's all I need to know, right? For now, that's what I care about. I care about what's it going to do on the market, big picture, and how am I going to trade it. So the New Zealand dollar is actually one of them that, and I've thought long and hard about doing a no holds barred Skype or a YouTube session, and I've had a lot of people say that would be fun. I can't do it. I can't bring it. It's one of those things like you can't. That's a lose-lose scenario. Because I do have opinions. I just don't have very many because there's nothing I can do about it. And what's great is that the market will tell me, hey, you're not allowed to have an opinion. You only trade what I give you, and that's what I pay attention to. The market is going to give me everything I need to know so long as I pay attention. So with this rising trend line that we have in here, this one's still going up. It's just we are seeing a bit of slowdown up here near the top. And so I'm a little hesitant to add any demand levels to this today. I don't really have anything that's super clean, but I'm also not willing to short it either. So next, Great British Pound, we had a really good move off of our pound level from the other day. Yesterday's pound level, we got another example of a touch and go off of the zone. Now this one didn't give us a 2-to-1. It gave us about a 1-to-1, but 1, 2, 3, 4, 5. On the sixth candle, we had not yet hit our stop, but that's enough to tell me you should probably get out of Dodge. And then a few candles later, right here, you hit the stop because you get below this red candle's wick. So certainly that one was not a great setup. And this level down here actually no longer exist since we've already used it once, but it could be a breakdown trade at this point. Some of this business travel may never come back. I agree with that. I agree with that, Dennis, a lot. I think that when it's all said and done, I think a lot of business travel is not going to come back. It's amazing how much Zoom has permeated our daily lives to the point that, meetings are meetings still going to happen face to face. Like if you are meeting with a copier salesperson, is the copier salesperson going to come in and come into your business and sit down and go belly to belly, or are they going to meet you over Zoom, right? So looking at the Japanese yen, we talked about this area of demand. This was a really good trade off of this demand level. If you missed the demand level trade, you got a second bite at the apple here on a breakout. The breakout trade was pretty good. Then we saw a little bit of weakness coming back down. So I'm going to leave this level in place. I'm just going to switch it to a confirmation trade because we just did a touch and go off of the level. The next area, that double top, that tweezer top there on the 4-hour chart is really, it's really telling, and it gives me some indication, that we may come down from there. But we've been unable to put in a new lower low, so I'm not going to add a supply level into here just yet. I will be conscious of this area here for a potential upside breakout. And then the Australian dollar, we looked yesterday at this Aussie level as a potential reversal. So we actually did come back and hit that last night, right after the Australian market opened, a few hours after the Australian market opened, and we've started to rally away from there. So if you're in that one, I don't think we've had a lot of great movement from there. So at this point, I would take your stop and move it to break even. I don't think that I would do a re-entry on it if price comes back. But if we come back to it in base, you could get a breakdown to this next level down here for a price target. So keep an eye on that for today. So let me share this grid on this one. All right. So we have come to the end of our day. And if you guys have any questions, please feel free to send me an email, chuck.fulkerson@tradersarmy.com. You can certainly always send us a text if there's anything that you need. It's our text line is available at our website. You can go find the text number there. Heading into the weekend. Now, we're going into a short week next week, right? Next week is the Christmas holiday, so we have market holidays in there. And we're coming up on a Sunday, so we could have a gap. So with that gap potential for Sunday, with the short week that we have coming up, just be cautious of your positions. Do you have to trade next week? No, you do not have to trade next week. There's nothing that says you need to trade. And so next week, I will do a daily market commentary on Monday and Tuesday, but I'm taking the rest of the week off. I will tell you that. So we'll do a DMC on Monday and Tuesday, but then after that, I'm taking the rest of the week off. We might actually on Tuesday look to do some options positions. I know we normally have our options session in at Traders Army. We might actually set up some options trades in that session, Corey Lane's session, that will play for some expiration for after January 1, right? So to make it through 2 holiday dates and see what we can get out of there. So if you guys have any questions with that, we'd love to have you join us. Go to tradersarmy.com, learn a bit more. I appreciate you all so much. Thanks for coming. Talk to you soon. See ya.